Alrighty guys, I want to show you a couple things. First thing we'll look here. This was a option for a put that I bought on Friday of last week and cashed out yesterday, almost for 900% gains. This right here is basically the pattern that we are expecting, and right now I'm expecting that we're at the bottom of the first W. So if I take this guy right here, I believe that we are right there and that we're about to go up 2.5–3%, and then we'll crash back down 2.5–3%, and then we'll go back up 2.5–3%, and then we'll crash another 7–8%. Now, what this video is going to be about is this is an option that I bought today with 3 days to expire. So basically I've lost, like it says 6 days to expire, but it counts the weekends. We don't count weekends. But basically I've lost no theta value on this, and I bought this when the QQQ was at 300.6, and so basically it's dropped $1.40 or 0.4%, and in that case I've lost $41.50. Now, what I'm trying to get at and explain, and that $41.50 of the $165 contract that it costs, that's roughly like 25% of its value. Now, if you guys watch today's market, if you guys watch yesterday's market, what you'll see is that in a brief period of time, the indexes might have a rally up or a rally down in like a 1% move, but after it's done rallying for the next hour, it goes up 0.4%, down 0.4%, up 0.3%, down 0.3%, up 0.2.5%, down 0.2.5%, up 4%, down 4%. Like, it's just back and forth all day long. Well, I got into options trading like 2 years ago, maybe almost 3 years now, and unfortunately I did blow up my account. But after I blew up my account, I spent thousands of hours paper trading, researching, and developing ideas on how to trade options and make a fortune. I came up with a lot of good ideas, a lot of new indicators that nobody's using that would allow you to have an edge on the market that nobody else has. Now, a lot of this would cost, like if you want to go and you want to collect all the options data, all the tick data of every symbol, so every up and down movement that happens every second, like if you wanted to collect all of this type of information, like I started the process, started filling out the contracts with these companies that have direct access to the market system, and I mean, you're looking at spending hundreds of thousands of dollars a year, and so it's nothing cheap, and I never really got anything complete on that side of things. But then as I'm like developing this and like options and trading SPY, SPX index options were like all I was focused on 2 years ago, and trying to raise money to get this stuff off the ground, well, that's when GameStop happened, and that's when I became aware of retail squeezes, and I made retail squeezes like my full focus. I want to get rich with all of you motherfuckers. I don't want to go do my own thing and get rich by myself. I wanted to get rich with everybody else. And so I was going to put my time and my efforts into explaining why a retail investors can squeeze a stock, how we can squeeze a stock, why we should squeeze a stock, and just, I mean, for AMC, I was doing 8 hours of live stream a day. For Mullen, I was doing a video almost every single day. And I thought we were going to win with Mullen. It looked like, if you look at it, they said on June 30th, there's 498 million shares outstanding of 500 million possible. So they probably had like 50 million shares of that 498 that they could dilute to us. But if we would have bought up all those 50 million shares, they would have been left with only 2 million shares left to dilute, which would have forced a squeeze. But then on July 27th, they won another 2 billion shares to dilute. So we're not exactly in a powerful position anymore. Well, here's what I know. What I know is that market makers, hedge funds, politicians, anybody out there who likes the status quo, who likes the system as is, who believe that everyone should just be investing in index funds and that nobody should be trying to get rich off the stock market. All of these people, they hate when retail makes money. And their purpose in life is to make sure retail, people investing their own money in their own stocks by their own volition, make the least amount of money as possible and preferably lose a crap ton of money. That is what they want in life. Well, there is a strategy that I have that will allow you to trade the QQQ, which is basically something that, like, it's an index that mirrors the NASDAQ. And I mean, all the indexes usually mirror each other. S&P 500, Dow Jones, NASDAQ. Most days, they usually make about the same movements. Some days, ones will be a little bit larger. Very rarely, some days, one index will be totally up while the other indexes are totally down. But in the most part, they're always moving together. So again, QQQ, just another index. Hundreds of companies are combined together as a formula to determine what the value of the QQQ is. And the strategy is quite simple. I'm going to explain it now, and then I'm hoping that tomorrow I'll be able to live stream and actually show you. Unfortunately, I don't have the buying power in my account today to be able to really trade it effectively, but I can paper trade it. And if you watch how I paper trade it, you're going to see the profits that I make, and you're going to see how the risk is, there is no risk. I mean, the only real risk is that it trades sideways infinitely, but if it did that, you're not going to lose a lot of money based off my strategy. And so, with that said, let me explain the strategy briefly, and then if I don't go live tomorrow to show you how to paper trade, well, like show you with my paper trade account, then I'll probably definitely go live on Friday, just because I work late tonight, and so today I was just too tired to go live today. I was sleeping while the market was open, and so if that happens again to me tomorrow, I have tomorrow off of work, and so I should be able to get to sleep at a decent hour, and Friday I should be able to live stream no problem. But I'm hoping to do it tomorrow. So the strategy looks like this, people. Now, based off this guy, this is a 3-day to expire. This September 6, 2022, 307 call strike that you're looking at on my phone right now. It is 3 days to expire of real trading days. If I was to have bought the options that expire on Friday, rather than losing 25%, I probably would have lost 35%. But on the flip side, had I not bought calls and instead I bought puts, I would have probably gained 25% instead of losing this 25%. And it's not really a probably, it's almost guaranteed. And so there's like, in the first 5 to 10%, there might be a little discrepancy where like the first 5%, you're losing on both sides if you bought a call and a put, but then after that, like whatever you lose on one side, you're making on the other. But basically, here's how it works. I'm going to buy a call on the strike that is 1 or 2 strikes out of the money with 2 to 3 days to expire on the QQQ, and then I'm also gonna buy puts on that same thing, and two strikes out of the money on the puts, 2 to 3 days to expire, and just make sure that my call, my puts are mirroring each other almost perfectly. Now, preferably, I got into this like if the QQQ is at $2.99, preferably I bought both the call and the put while the QQQ was at $2.99. Now, sometimes you make a buy order and then you go to make the next one and it's moved a little bit, but that's all like within a margin of error. Like, we just ignore that. Don't even worry about that. You just get in when the getting is good. Now, here's what's gonna happen. If it moves either way, one of your sides is gonna make money. Now, if it moves one way, the odds of it moving back the other way increase. Every time it goes up, the odds of it coming down increase. Every time it goes down, the odds of it going up increase. Now, a lot of people, like I've seen people talk, like they just call this a strangle, where you play both sides, and if it moves up or down enough in either direction, you're gonna make a profit. Well, that's their problem, is that typically indexes just move back and forth, and they don't move up or down enough to make a profit. Every once in a while, you get in a rare situation where you can make 1,000% on your money, like I did on those puts that I showed you earlier. But for the most part, it's just going to go back and forth all day long. And so, what you want to do, what you want to think about, is when it starts moving in one direction, let's just say 0.4%, like this example, and I've lost 25% on this option, I've made 25% on the put option, what am I going to do? Well, what I'm going to do is I'm going to come in and buy for the exact same amount another call option, the one where I've lost my money, because I know that if it came down and my put made money, my call is more likely to come back into the money and break even. And so if I buy another call right there and it goes back up, well, now my call has broken even, the put that made a profit has lost its profit and broken even, but the call that I bought after the put made a profit is now up a profit. Now I can close out that call, and now I still have a call and put that are both broken even, and I've just taken out 15% profit. Now, if the put is up 25% and I decide to buy a call and then it moves down again, well, here's the thing. The more that it moves in one direction, like my call and my put can only lose what I put into it. So if I put $100 on each side, I can only lose $100. But if it moves enough in one direction, I can make way more than $100. And so you're not scared of it running dramatically either direction, because if it runs a full percent in either direction, what you make on the put or the call is going to be a lot more than what you lose on the other side. Now, I buy a call and a put. It moves in one direction. Let's say it moves towards the put. I add another call, expecting the put to come back and break even, and my call and my new call to make a profit, as my old call that was losing money to break even. That's where I'd cash out my call, and then I'd just wait to do the same thing. If it goes to the call side this time, then I'd buy another put, and now I have 2 puts and a call. My put has lost money, my call is up a profit, and I just bought another put. And if it comes back to the middle, now my call and my put that I originally had are broken even, and now my put has made money, and I cash that out. And I'm looking to repeat that and collect 15% of whatever I'm investing in each trade over and over and over, 100 times a day. On a volatile day, this can be done 100 times a day. Now, if it moves, let's say I have a call and a put, it moves to the put side, and I buy another call. Let's say it moves to the put side again. Now my put has made XX percentage, my call has lost 1 leg down percentage, and then my initial call has lost 2 legs down percentage. And so I've probably lost more money than I've made at this point. Well, at this point, what I'm going to do is I'm going to have my old position still in there, and then I'm going to start a new call put position. And I'm going to use that new call put position and use the old strategy for this new position as I do the same thing with my as I hold on to my bottom position. And my my first position is going to consist of the 2 calls and a put, with the put making the double the money because it's made 2 movements towards that direction, while the calls have lost 3 volumes worth of movement in that direction. But if it continues to move that direction, eventually my put is going to start making a lot more than those 2 calls are losing. And so I'm just going to let those ones ride and see if it comes back to where the calls get in the money and I can cash those out for a profit. Otherwise, I'm just going to look for getting my 100 back and forth trades on my new call put position, where I do that same original strategy that I just went over with you guys. I'm telling you guys, I'm going to paper trade this, and I'm going to show you how, if you have $100,000 in your account right now, you can do this trade and make each trade worth $2,000, and you could probably end up making $5,000 a day every single day starting right now. And by the time you get to $200,000, you can double your bets, and you can now be making $10,000 a day every single day. And it's probably a lot more than what I just said. Like, I'm probably being pretty modest, especially on the good days. But like today was a really slow day, and I still think there was probably 10 to 15 different movements that I would have cashed out on. And so I'm excited to show you guys, and I hope you guys join me in the live stream. And if you guys got money, I hope you freaking trade this strategy, make the money, join my lawsuit against Mullen, whether you invested in Mullen or not. Help contribute towards the legal fees and earn yourself part of the reward that we get from Mullen Automotive for screwing us over and stealing our short squeeze and freaking rigging a dilution vote. And most importantly, start making money every day as a retail trader and piss off the machine, piss off the hedge funds, and let's see what they do. Because they can't do anything except trade it fucking sideways all day, every single day, and not give it any more volatility. And if that happens, it's never happened before. Like, it'll be a brand new market that the world is seeing, and it'll be a beautiful thing. A beautiful, like, all I want is for this system to fucking change. And the only way that happens is if we start making money or we beat them in the court of law. So I already got the court stuff started. Now I want to make sure that everybody's making money. And yeah, I just hope you guys join me. This ain't no joke. This is the greatest advice ever given on any YouTube ever of all time. I am a master trader. I am the master of the stock market. No individual knows more important details about the stock market than I do. In a combined information of all the possible knowledge you could have, I have more knowledge on an overview basis of the whole thing than anybody else. And I'm here to share it with y'all. So I hope you take advantage.